Ben, you say that when you reiterate your buy rating on this, you get a lot of eye rolls. What do you tell the skeptics who are doubters?
Well, this is like when Apple did the iPhone, and if you gave up on Apple in year 2 or 3 of the iPhone, you missed a lot. So this is really in the beginning. And what people, really are skeptical about is the size. And they're already a huge market cap here, but there's still room to go. And obviously, Jensen running around New York meeting investors all over the East Coast, he's got a lot of good things to say. I think that you should listen to him.
Nvidia, you actually say, is your second cheapest stock in your group. How do you look at it on a PE basis?
Well, I look at PE to growth, and there's a ton of upside next year to our growth estimate, and revenues of 40%, but there's upside there, and there's probably not as much upside in any other stock. So I think it's trading at about 1 times PE to growth for next year. And that's really attractive for a name like this, as long as the numbers are there. And if obviously if the direction is upwards to the estimates, that's really attractive still. And I think that each day you got to walk in and say, what are our checks showing us? What is the research showing us from the bottoms up? And it's still there.
Demand for Blackwell, what are you seeing in your channel checks at that point?
It's pretty huge. What the big issue was whether they could get the production up and running and get through their mask issue, and they seem to have done that, and whether they can get through the negative mix shift of scaling a new product. And I think they're going to do that pretty well within a couple quarters. And the demand looks really insane, like you said. These big clouds, you got to understand, these are huge capitalized companies, and if they're going to beat their cloud numbers that they're going to show the street, meaning Microsoft, Google, Amazon, they got to buy Blackwell, and they got to get the customers up and running, or else they're not going to beat numbers. And that's it. That's how you get the sequential acceleration to their cloud business. The companies will say a lot of different things that, it's because of how great they are in cloud, but really it's because investors run to their platform to use the latest and greatest from Nvidia. And that's how they're going to beat, and they're going to buy a ton. And pretty excited.
TD Cowen has maintained its buy rating at a $165 price target for Nvidia's stock, indicating its ongoing faith in the firm. Strong demand for Nvidia's Hopper products is anticipated to outweigh any potential gaps during the product's ramp-up period, which is the basis for the firm's position. The TD Cowen analyst emphasized that the artificial division between the January and April quarters made it difficult to accurately time and model the shift. Despite these obstacles, the company believes that the present trends in demand for AI investment will continue to be strong. It is thought that the danger of underinvesting in AI is higher than the risk of overspending, indicating a promising market for Nvidia's products. Alongside its reaffirmation of the buy rating, TD Cowen has a positive outlook for Nvidia's future, adjusting its fiscal year 2026 expectations upward. With a maintained price target of $165, the firm's comments highlights its conviction in Nvidia's steady development and their stance that the company is still a top choice in the market. In other recent news, Citi has reiterated its buy rating for Nvidia, predicting a large increase in the company's GPU sales over the next several years. The growing importance of GPUs in machine learning, ML, and artificial intelligence, AI. Infrastructure is what is driving this expansion. According to Citi, Nvidia's GPU compute sales are predicted to soar by 118% in 2024 and 84% in 2025, with a significant increase in sales to hyperscalers as well. The robust demand for cutting-edge chips used in AI applications, on the other hand, was a major factor in Taiwan Semiconductor Manufacturing Co.'s 40% increase in third-quarter net profit. TSMC's affiliation with prominent tech firms such as Apple and Nvidia has improved its financial performance. In addition, Advanced Micro Devices plans to introduce a number of new AI processors, signaling its advancement in the market for AI chips. The company's expectation for AI chip revenue for the year was revised up from $4 billion to $4.5 billion. Due to the higher demand for AI servers, Foxconn Technology Group reported record-breaking revenue for the third quarter. Foxconn's cloud and networking devices segment, which serves well-known customers like Nvidia, saw especially high financial results. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Look at Nvidia, one of the most top searched stocks here at Yahoo Finance today. We're looking at a bit of a move lower, but the story all week has been the fact that we're very close to those record highs, given the fact that we've seen this continued excitement around the AI boom. Analysts reiterating their buy ratings on the stock, citing revenue from its new Blackwell chips and new funding for AI startups. The stock also getting a boost after Taiwan Semiconductor, which is one of its manufacturers, reported better than expected sales. So exactly what maybe this ultimately means here for demand down the line. That has, of course, been the driving factor for Nvidia. I think the question is any sort of the fact that it could maybe not live up to those initial expectations of Blackwell that have been a bit of a headwind or a challenge here that analysts have been talking about now for quite some time, but that narrative has certainly shifted. We've heard from CEO Jensen Huang reiterating time and time again that he's very confident in the demand there. He quote unquote called it insane demand for Blackwell chips, and that was enough to get any of those, or seems to at least for now, convince any of those naysayers that Nvidia's momentum still looks like it will continue here to the upside, Maddie.
I mean, it's interesting given just the degree of movement that Nvidia causes too globally. I know we talk about this all the time, but I've got a note in front of me here noting that Nvidia represents 15% of global equity volatility. That is in every stock market in the entire world, every major index. Nvidia alone is responsible for 15% of global volatility. Also, you mentioned Taiwan Semiconductor. Nvidia has been responsible for about 25% of the market gains here in the United States year to date, but you can see again that global impact, right? TSMC's gains obviously continuing to move to the upside off of that revenue that we talked about earlier this week. Taiwan Semiconductor is responsible for 75% of the year-to-date rally in Taiwan's index. So just giving some examples of how just Nvidia's growth story continues to be huge, not only here in the United States, but also more broadly, and Nvidia being really the clear AI beneficiary. That's what Goldman Sachs is calling it as of yesterday here over at their equities team, saying that growth can continue to be expected into what they call AI phase 2 multiples, but they still recommend being selective within some of those AI stocks.
Early Monday trading saw Nvidia shares rise, continuing their remarkable autumn gains after two prominent Wall Street analysts expressed optimism about the tech giant's near-term prospects. As investors continue to price in the value of Nvidia's hammerlock on the global market for AI chips and processors amid a multi-billion-dollar investment boom. The company, which has added about $780 billion in market value since early September, surpassed Microsoft as the second most valuable company in the world last week. Last week, Advanced Micro Devices, its closest competitor, informed investors that the market for AI accelerators, chips that drive large language models used by hyperscalers like Microsoft, Alphabet, and Meta platforms, could grow by 25% to $500 billion in 3 years. The same market was estimated to be worth about $45 billion last year. Both Nvidia's contribution to the present market boom and the effects of its investments on the whole economy are strong points. By 2026, Nvidia is expected to account for around 14% of market capital expenditures at the current predicted rate. In a note released on Monday, Citigroup analyst Atif Malik reaffirmed his $150 price objective and buy rating on Nvidia shares, predicting that the company will take a sizable chunk of the billions of dollars in spending already made by U.S. cloud providers. Nvidia continues to lead the hyperscaler AI accelerator installed base, according to Malik and his team, with a 67% share of the total installed base at the 4 largest U.S. hyperscalers. Nvidia's massive installed base, robust scaling capabilities, and chip performance lead help businesses with multi-cloud strategy. According to Malik, Nvidia may witness a 118% increase in graphics processing unit sales this year and a further 84% increase in 2025 as a result of the introduction of its new Blackwell platform and its Heritage Hopper chips. That would account for about 31% of all capital expenditures made by U.S. cloud providers this year and about 35% the year after. We predict that in the drive to develop artificial intelligence/machine learning infrastructure, GPUs and ASICs will coexist. Larger, more complicated models will be trained and inferred by GPUs, while specialized models and unique cloud AI products will be handled by ASICs. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Gross margins, there has been some concern recently about whether they could keep up the gross margins or whether they're continue to drop a little. And this is, again, from very high levels.
Yeah, I mean, that was our main concern as well. And whenever you launch a new product, and make changes to it, you have to, you even write off some older inventory or inventory that's no longer useful. They had a larger write-off than usual last quarter, but we think that's going to get less and less as we go through. And what we're seeing is them moving past that gross margin issue. So what should happen is gross margins go down a little bit for a quarter or two and then turn. We see gross margins in the mid-70s, which can power close to $5 in earnings power, or that they can demonstrate over the next 4 to 6 quarters.
The stock was down about 2% in the calendar third quarter. What about the fourth quarter? What makes you think that this is going to be the time that things really turn around?
Well, I think that the street this time, so last year as well, third quarter is a tough time for semis anyway. And for Nvidia, they tend to do the market tends to really hype things up in the first half and then digest it in the second half. And this year, a lot like last year, what happens around this time is folks start to say, yeah, I know next year is great, but what about the year after, meaning 26? And I think the street this year is going to discount a little quicker that things are okay. They have that huge show in March called GTC, and we think they'll unveil the Rubin chip for 2026 there. They've already talked about it, but we'll hear more about it. And then you'll realize, oh yeah, 2026 is a growth year, and it's a pretty big one. And the market probably discounts that a little sooner than they did last year because Jensen is obviously gaining more and more credibility, which is obvious.
We now project a $380 billion AI accelerator total addressable market by 2028, with AI GPUs making up 75% of the market, according to AMD's upward revision of their AI total addressable market to $500 billion by 2028, and the ongoing high demand for Nvidia products. Analyst Toshiya Hari of Goldman Sachs, meanwhile, pointed to Nvidia's anticipated advantage from the growing complexity of AI workloads, which the company described in a revised investor deck last week. On Monday, Hari sent a note raising his price target by $15 to $150 per share. Nvidia contends that as hyperscalers expand their enormous databases, the sophistication of AI reasoning will lead to a rise in processing demands. In a presentation last week, Nvidia stated that training computation increases exponentially with larger models, multimodality, reinforcement learning, and the creation of synthetic data. According to the presentation, inference computation scales exponentially with larger models, multimodality, vast context, low latency, and now extended thinking time. Taiwan Semiconductor, the largest contract chip maker in the world and a major participant in the group's supply chain, also bolstered Nvidia's short-term view when it released third-quarter sales data last week. According to TSM, revenues for the 3 months ending in September were around $23.3 billion, rising 36.5% from the same period last year. Later this week, the group will provide a comprehensive quarterly statement along with a new full-year projection. In late August, Nvidia informed investors that its current quarter revenue was approximately $32.5 billion. The forecast was made at a time when it was experiencing some shipping delays for its new Blackwell processor line due to supply chain snags and design revisions. Blackwell should bring in several billion for Nvidia's fiscal fourth quarter, which concludes in January, according to finance head Colette Kress. She also predicted that during the second half of the year, legacy Hopper sales will increase. Pre-market trading saw a 1.3% increase in Nvidia shares, indicating an opening bell price of $136.58 per share.